Welcome to StockMarketFunding.com. Here's the Dow chart. It's a weekly, and I'm going to show you some bullish things, but I'm also going to show you what is bullish as far as the weekly charts go from number one, when we had our big correction over here. We called this one here. You can go look at StockMarketFunding.com. Go to online trading community link there, daily stock charts.com. You'll find out all the index videos and everything there and a lot more. When we rolled over and went down on the 10-week, that's when the trend was broke. That bull trend was broke. 4 weeks below the 10-week with the declining 10-week broke that bull. Now the bear was in control. However, the bull has come back between the two parties. So I flattened out. I'm pointing up. I got a gap up above the high bar. I'm above, taking out the 20-week. Yes, the economic data is very pessimistic moving forward. However, the Dow component earnings so far and the quarterly earnings of July of 2010 have been extremely well, as we told people that they would be. And the thing about it is you're no longer, it takes 4 weeks to go below a 10-week closing price for the SMF bear trend qualifier. We have our own proprietary mathematical qualifiers based on weekly moving averages and many more things that most people will never know until they come here and find out how accurate and how well they work. What I want to tell you on this is that the earnings picture is what they're focusing on. I'm just going to pull up my economic calendar, and I'm going to tell you that tomorrow, or on the 29th, we're going to be watching the 29th. Durable goods ex transportation's out. So are these numbers are coming out in the morning. The Fed's Beige book is not going to be all that great. Now, prior weeks when they got the bullish moving outside of this bullish setup, coming out of a bear trend into a new short-term bull trend. So the bear trend is trying to get broke, and it's very evident here as far as this goes. However, what has been the case is that when we get the numbers, that Beige book tomorrow, crude inventories, we already know that those are going to be what they're going to be. The durable orders is something that everyone's going to be focusing on. But the most important thing is that weekly jobless claims on the 29th with continuing claims. The most important thing is GDP advance is going to come out for Q2. And basically, the unemployment cost index is very important, right along with the Chicago PMI and the University of Michigan sentiment. Well, hey, they're not going to be good. Now, the thing about it is this, and we've got great gains because of this move here, and everything looks good, but the thing that we're going to have to do is the gains that we have made is because this thing could turn on a dime. Basically, the way that the Dow, the S&P, NASDAQ, and all of them are, yes, they are setting up. If they close 4 weeks above the 10-week and the 10-week is going up in price, ascending in price, that's different than a bear trend. So basically, you've got the makings of week 1 and week 2 of that. There's still 2 more weeks plus this week. You got to have 4 closing weeks, and you got to hold above that support level at 10,200. The thing of it is as we wind down in the earnings season, with that economic calendar coming out, is I already know that data isn't going to be anything to write home about. However, what we're going to be focusing is if they're going to discount this, the market's going to discount it and let this run. It could derail on a dime. Yes, it's very bullish. It's all setting up to be very bullish. However, I just want to caution anyone that does get a hold of this and understands that it's too early in the game to say, are they going to discount this news when it comes out? And that basically in all four indexes, what we've had is a counter trend to the deep reversal trend. And we've gone from bear back to bull setup in the bull infancy stage. Everything is looking wonderful over here, but I don't want you to be illusioned. And the thing that I want you to be careful understanding is, are they going to discount any of this bad news? This is very important news this week that's going to be weighing on the market. And so far, when the markets want to pay attention to economics and they don't discount it, bam, down we go. And that would mean that the move would be a drop down to support if that's the case. And if we don't stay above it, we don't stay above these key bull reversals based on the economic data. And it's very, very, very important that you learn to establish the difference and the wisdom to know the difference. Is there going to be a discount mechanism, or is the big supply institutional hedge fund managers, are they going to go back focusing on this? And we start another sell-off. As bullish as the attempted counter trend reversal remains here on the Dow, right here, as it's bullish to come up off that low. I will tell you though that it could be easily derailed, and that going into this economic data, which tomorrow we can see what's going to happen here as far as this data up here goes. And but the Beige book is a big one. So before that Beige book is released at 1400, we will be buying put options against our call options just to protect any market volatility within the bullish setup on the Dow, and all four indexes for that matter are all very similar. So the thing is, does the market focus on economic data? Do they discount the economic data because of the good earnings for now and put it on the back burner, and we continue to run higher? We'll find out. The thing about it is, when you got good gains up off of that low like we do here, is that it pays to start getting some put options below the market, just in case they decide to go back and focus on any bad data that could come out of here. And we could have a lot lower GDP reading forward looking. I don't expect nothing out of the unemployment cost index. I don't expect anything on the unemployment to be changing anytime soon. If anything, I'm expecting it to go higher forward looking. So between the Dow and economic calendar this week is, do you have a bullish setup? However, if they don't discount the news over here, we could start a new sell program. If we get back below the 10-week, it's over. And so basically it's an overall counter trend to the downtrend, and now it's going to be about how the big players are going, how the market per se, and the players, bigger players within the market, how they're going to react. And it doesn't hurt to hedge your good gains with some below the market put options, just in case this bullish little move fails due to any super hyper negative economic data. So basically Dow versus economic data. That's what you need to know.